A clear software comparison starts now. An AI voice will continue the walkthrough. Let's start directly with SimplySafe Dividends pricing, because this platform is positioned very clearly as a premium dividend research service, not a general-purpose portfolio tracker. SimplySafe Dividends is priced at $39 per month, billed annually at $468 per year. There is no discounted entry plan, no flexible monthly downgrade path, and no complex tier structure to navigate. You either subscribe at the full rate or you don't. That pricing alone makes its target audience obvious. Long-term income investors who prioritize dividend safety, stability, and risk control over keeping subscription costs low. At this price point, users receive unlimited portfolios, full access to the platform's proprietary dividend safety scores, alerts for dividend increases, cuts and suspensions, and detailed income calendars with forward-looking forecasts. SimplySafe Dividends also includes analyst-written research reports, valuation charts designed to help investors avoid overpaying for yield, and financial charts with up to 10 years of historical data. Stock and closed-end fund screeners allow users to filter opportunities based on yield, dividend growth history, safety scores, valuation metrics, and income consistency. The platform's philosophy is clear. Avoiding dividend traps is more important than chasing the highest yield. Feature-wise, SimplySafe Dividends is built almost entirely around risk reduction and income durability. The dividend safety score sits at the center of the experience, combining cash flow coverage, payout ratios, earnings trends, balance sheet strength, and recession performance into a single, easy-to-understand signal. Income calendars and forward projections help investors plan cash flow months or years ahead, while real-time alerts notify users when dividend policies change. Analyst commentary adds qualitative context explaining why a dividend may be safe or risky, rather than leaving investors to interpret raw numbers on their own. Where SimplySafe Dividends truly shines is clarity and guidance. It translates complex financial risk into actionable insights, which is especially valuable for retirees, near retirees, and conservative income investors who care more about preserving income than maximizing returns. The platform removes much of the guesswork around dividend reliability and emphasizes consistency, sustainability, and long-term income preservation. That said, the downsides are just as clear. The price is high compared to most dividend tools, especially portfolio trackers and income dashboards. There is no lightweight or budget option for casual investors, and the platform is not designed for transaction tracking, portfolio rebalancing, performance attribution, or total return analysis. Investors who want hands-on portfolio mechanics, frequent trading insights, or detailed allocation analytics will likely find the tool restrictive. The strengths of SimplySafe Dividends are its focused research, safety-first philosophy, and structured guidance. It's ideal for income-focused investors who want confidence, discipline, and professional insight built into their decision-making. The weaknesses are cost, limited portfolio mechanics, and reduced flexibility for investors who prefer a more DIY, data-driven workflow. Now shifting to Dividend Data pricing. This platform approaches dividends from a very different angle compared to research-led services like SimplySafe Dividends. Dividend Data positions itself as a data-driven dividend research and portfolio tool, built around long-term financial history and AI-assisted insights rather than analyst opinions or editorial guidance. Pricing is straightforward, but still sits firmly in the premium category. The monthly membership is priced at $29.99 per month, while the annual membership costs $299 per year. Both options include a 30-day money-back guarantee, the ability to cancel anytime, and a same price for life promise once subscribed, which adds long-term predictability for committed users. At this price point, Dividend Data includes unlimited portfolios, removing structural limits for investors managing multiple strategies, accounts, or watch lists. One of its standout strengths is access to more than 30 years of financial data per company, giving deep historical context around dividend behavior, earnings growth, payout stability, and long-term performance trends. The platform also includes AI-powered chat functionality with up to 100 prompts per month, allowing users to ask questions about dividend stocks, portfolio composition, historical performance patterns, and comparative metrics across time periods. This makes the experience more interactive than static screeners. Feature-wise, Dividend Data blends dividend tracking with broader stock and financial analysis. Users can analyze individual companies using decades of financial statements, track dividend payments across unlimited portfolios, and observe how income and fundamentals evolve across market cycles. Portfolio tracking is available, but the platform clearly prioritizes research depth over operational reporting. Instead of contribution reports or transaction workflows, the focus is on understanding businesses and income durability through long-term data. One major advantage of Dividend Data is flexibility. There is no heavy analyst narrative steering users towards specific conclusions. Instead, investors are given raw data, AI-assisted exploration tools, and historical context, and are expected to form their own judgments. That same flexibility can also be a drawback. Dividend Data does not offer structured dividend safety scoring or clear risk flags like Simply Safe Dividends. There is no proprietary system explicitly designed to warn users about potential dividend cuts. The platform also lacks curated analyst commentary, which means newer investors may feel overwhelmed by data without clear guidance. Portfolio tracking exists, but it is not optimized for clean income calendars, contribution tracking, or polished reporting visuals. In terms of public perception, Simply Safe Dividends currently holds a Trustpilot rating of around 4 stars, but based on a very small number of reviews, meaning the score should be interpreted cautiously rather than taken as definitive. Dividend Data does not currently have a meaningful or established Trustpilot rating. When review data is missing or extremely limited, ratings should not be used as a quality signal. In these cases, hands-on testing, workflow alignment, and feature fit matter far more than public scores. Final takeaway: if your priority is protecting dividend income, avoiding dividend cuts, and relying on structured research that distills risk into clear, actionable signals, Simply Safe Dividends remains the stronger and more conservative choice. If you prefer a data-heavy approach with decades of financial history, AI-assisted exploration, and full freedom to interpret dividend information without analyst bias, Dividend Data offers a compelling alternative. If this comparison helped, hit like, subscribe for more honest investing software breakdowns, and click the link below to explore the platform that actually matches how you research dividends, track income, and invest for the long term with confidence.